Hi, and welcome to this episode of the Barbarian Investor Show. I'm Adam Jason, and this week I'm delighted to be joined by Edan Yago, the co-founder and CEO of 1A1Z. Welcome, Edan.
Thank you very much for having me.
It's a pleasure. So we wanted to talk today about something that is really the original use case in many ways for Bitcoin, which is cross-border payments, international payments. So can you give us a bit of background on the, inefficiencies within the international payments infrastructure and system?
Right, so everyone knows that international payments are expensive and complicated and slow. Mm-hmm. The real question is why, and the reason is because money doesn't exist, right? So Barclays or HSBC, they say they have money, but the only place that that money is recorded is inside their own databases, which is fine if you're transacting inside the UK between, these two banks. But if one of those banks, Barclays, wants to send funds to Thailand, they now need to convince a bank in Thailand that their instruction that we're sending you $1 million or £1 million is real. Mm-hmm. Mm-hmm. So the way companies like TransferWise or Revolut are trying to tackle this is they want to make it easy for you, for the consumer, to get the experience of instant payments. And so what they actually have to do is extremely complicated and expensive. They go and they open up 100 different accounts in 100 different countries, and they deposit enough funds there to last them for 3 or 4 days. And then when you make a transaction, they instruct payment there instantaneously, and then they send the funds, waiting 3 or 4 days for the funds to replenish. Right. So it's an incredibly complicated system.
Yeah, so under the hood, there's more going on than it seems.
Yeah.
So how can blockchain potentially, make this, smoother or simpler or even cheaper to transact globally?
Well, the thing with blockchain is that the money actually does exist, right? So if it's Bitcoin or if it's Ethereum or if it's one of the new stable currencies, you actually can see on the blockchain, this person has 1,000, this person has 712, and when they make a transaction, the entire world gets to see it. Mm-hmm. So there's no question as to whether or not it's happening, and it happens instantaneously. So instead of having to open up 100 different accounts, companies that want to do international payments can just send the funds on demand, and they settle instantaneously.
Right, and do you think that this is something that the banks and financial services companies are seriously looking at, or do you think, for example, the fact that an address is pseudonymous, it doesn't actually have the person's name, that's an issue, right? Because they have to do all the KYC and AML and all that kind of stuff. So what's the actual chance of adoption, do you think?
You'd think that the banks would be super interested in this because they have to deal with all this complexity. But I was speaking to someone from a major bank here in the UK, and I was saying to him, these are some of the reasons you would want to adopt this technology. And he said, but why would I want to do any of this? And I said, because your consumers will have such a better experience and you'll get more customers. He said, I don't want more customers. If I get more customers, the government's going to start looking at me like I'm a monopoly, right? So for bankers, they've been talking for years about experimenting in blockchain and doing all kinds of proof of concept trials. But the truth is they're buying this like someone going through a midlife crisis buys a Lamborghini. They're spending a lot of money on something that they don't really need. Mm-hmm. And really, for the banks, they don't even really have any intention in introducing these technologies because they go to the very heart of the bank's current profitability, which is the complexity of the existing system.
So the kind of bureaucracy and inefficiencies is where the banks make money, essentially. But do you not think that, since the latest recession in 2008, there's more of a push and a sentiment towards transparency and openness within our banking system?
Absolutely there is a push, but it's not coming from the banks. It's coming from the regulators. Mm-hmm. And it's coming from the consumers and the companies who are working with it. And in fact, that's exactly why blockchain was invented. And it's exactly why there's so much excitement about it. Because now upstart startups can have a level playing field and compete even better, right? They can perform transactions more cheaply, more transparently, and serve the consumer better than the banks can. And so maybe one day the banks will adopt this stuff, but they're going to be the last to do it, not the first.
So maybe the consumers will actually just bypass the banks, right? And people will start transacting globally without the need for these third parties, these intermediaries.
Right, but there's a problem, right? And the problem is that if you try to use Bitcoin today as a currency, you'll discover it's kind of a crappy currency, right? It's very, very volatile. It's very unfamiliar. And in fact, it's not just Bitcoin now. There's thousands and thousands of these cryptocurrencies, which makes the whole thing really, really complicated. In fact, I like to say that there are no cryptocurrencies because nobody has a thing which you can use as a currency, which is something that you earn or save or spend in. But something's changing now, and that's an entirely new wave of cryptocurrencies, which people are calling stablecoins. And the idea with stablecoins is that you create cryptocurrencies that have low volatility, that are probably familiar because they're basically priced in the same way as the pound or the dollar. And so that allows you to have dollars, pounds, and other familiar currencies that people can use in their everyday lives and businesses can use every day on the blockchain.
Right. I mean, how far is that from, just using the pound or the dollar, but, the digital cash that is or is not in your bank, in your opinion, is that much different to it? Is that really kind of defeating the purpose of Bitcoin created as an alternative to the existing financial system?
What it's really doing is it's combining the advantages, right? So the pound has the huge advantage of being familiar, of having a massive network of merchants and businesses where, basically you can walk into any store and spend the pound, right? But at the same time, it has the huge problem of if it's digitized, it doesn't really exist, right? In the same, it's only registered at the bank. So by combining these things, you can have pounds that any person can have in their wallet, transact internationally, convert internationally, and it really, really exists. But we do have a problem, which is that there are so many projects who have realized the value of this. They're all trying to create their own pound on the blockchain, their own dollar on the blockchain, which is making the space really, really confusing and risky because you don't know if the stable coin that you're using is actually reliable. So what we're doing at 1A1Z is we're building a tool which allows anyone who holds one of these coins to deposit it and get a standardized coin which is insured and backed by the entire industry of stablecoins. So you can have £1, $1, €1 across all of the blockchains supported by all of these different issuers.
Right, that sounds very interesting. And presumably, well, obviously the actual banks themselves and central banks are not, in any way associated with this or joined to it. So there's still some need to have a relationship with an existing bank.
No, not necessarily. So a big reason that we're doing this and a big reason that people are pushing for stablecoins is because banks have been so hostile to blockchain. And so very, very smart people, including the people on my team, are figuring out ways to create pounds which don't need to be issued by a bank or even by a central bank. Over time, I think that banks and central banks will adopt this technology. Regulators will adopt this technology. But no one's ever said of a central bank or of a regulator, early adopter.
Okay, Edan, thank you very much for joining us. It's been a pleasure.
Cool, thank
Cheers.
you.